Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it couldn't have been better. We have 22,925 with us, 90 points higher, second day in a row and a strong momentum that continues, and we are near the high point of the day as far as the Nifty is concerned, and a lot of supporting factors today. Most of the sectors are supporting with gains, barring IT and FMCG. All the sectors are up and about. When we look at the broader markets, they are the ones that are outperforming the even benchmarks right there. About nearly 2.5 to 3% uptick that can be seen on mid caps, small caps also up by 2.5%. Real estate sector is nearly up 3% as well. So that continues on a second day in a row. We have PSU banks, consumer durables, metals, oil and gas, even financial names and private sector banks that are doing very, very well at this point in time. On the Nifty, the top movers remain Shriram Finance 4.2% higher, HDFC Life, Apollo Hospitals, Tata Steel, Power Grid as among those top movers, while on the downside you still have stocks within the IT pack that are dragging like Infosys, TCS, Tech Mahindra and some FMCG names like ITC and Britannia at this point in time. But the PSU stocks are also hogging all the limelight today, 1.9% higher. You have the defense names that are soaring high after the recent correction of about 30, 40, 50% from their all-time highs. The defense index is 5% higher in trade. This is led by smart moves that are being seen on Garden Reach that has hit 20% a circuit at this point in time. I don't even remember the last time that I saw Garden Reach hitting a 20% circuit. 1645, you can actually see a 10% surge on Mazagon, Cochin, BDL. Many of these stocks are also doing very well at this point in time. Let's welcome our guest on board to help us understand what does he make of the strong moves that are we seeing on the markets. Sharad Awasthi, Head of Research at Smiths, now joins in. Warm welcome to you, Mr. Awasthi, and thank you so much for joining in. Well, 2 days in a row when we have been celebrating higher highs. Are you giving a lot of importance to this recovery that's coming in, or are you taking it with a pinch of salt?
No, I think as we have been speaking earlier also that most probably the valuation discomfort that was there with respect to India vis-a-vis
Yeah.
most markets, that has more or less narrowed down or more or less turned in favor of India. India remains a promising space within the whole world right now in terms of growth rates, etc. So I think once the valuation discomfort is gone, there was high probability that some buying would start emerging, and most probably the buy China, sell India trade is also gradually dying down. Uh, Maybe over the next 3 to 6 months, you see lesser FII sellings, more clarity regarding the interest rates in the US, and some more clarity regarding the tariff issues. So as these things boil down, I think we should have some improvement on the domestic side, the liquidity infusion back into NBFCs, the encumbrance that has been put in around, say, 1.5 year back. I think that would substantially boost liquidity in the large. So that should help us, and the tax cuts should also play some boost for the our consumption side of the story. So I think on the domestic side, most things should improve, and largely all this should contribute to better earnings also. And on the international side, more clarity on interest rates and tariffs, particularly from the US. I think that could result in some more inflows for Indian markets.
Okay, got that. Let's talk about a few pockets that are rallying, sir. Defense names to start off with. What do you make of the strong moves that we are seeing today? Is there a key reason behind this surge? Do you think enough was already priced in? Was it oversold? And what would you advise now?
Yeah, I think the way these stocks have corrected, you could largely consider this as a relief kind of rally where, some kind of bottom fishing has come into place. But long term, I think again, you have to be very clear that most of the stories, barring probably on the defense side, BML, where I have a target of somewhere around 4,000 rupees. I think most of the stories are fairly squarely priced for, 1.5, 2 year kind of horizon. But if you extend that horizon to 3 to 4 years, I think that then most probably most of these stories will make you very decent money. Most of the offset clause clicking in and the impact of that on numbers, add to that the export opportunities that open up for these companies.
Hmm.
They should ideally play out, after this gap of 1.5, 2 years. So during this 1.5, 2 years, it is just whatever they have accumulated in terms of order book in this period that should play out. And by virtue, these businesses have long gestation, and so that could be a challenge. Some order cancellation, some delays that could result in a lot of correction also. So I think if you don't have a horizon of 3 to 4 years, buying B and L, I think most of it should be fairly squarely priced.
Okay, so must have a long-term horizon when you're looking at this one. Beyond this, we're also looking at a lot of other interesting names. I think the mid and the small caps, again, a pocket that we've discussed so many times, where there was discussion about frothy valuations, excesses. These are also coming back pretty strongly. I mean, 2.5, 3% kind of a rally coming back on mid and small caps, recovering after those 21, 25% of dips from the all-time highs. Is it at the right time to again look at opportunities within mid and small caps, sir?
Yes, certainly. I think you have been generous calling it only 21 to 25%. I think
Yeah.
on average, most of them would have corrected 40, 45%. But yeah, I think most of the stocks where valuations are comfortable and the story is intact in the long term, I think you should certainly start looking at them. As I've been telling for quite some time, from these valuations, if you buy something, uh, you have to be extremely unlucky to lose money, or you know because I don't think from these valuations there can be too much of correction in prices at an absolute level on most of the stocks. Some aberrations might happen. But largely, when you look at the screen across the board, I think it is very difficult to find companies which you could call, apparently exorbitantly valued. So I think, yeah, from these levels, it would be hard for you to lose money. Buy with a long-term horizon, I think most stories look very good. Uh, though the recovery today is a bit more sharp, but when you look at the correction these stocks have seen over the last, 6 months, 7 months, I don't think it is a very good recovery. It is a very small recovery in the total scheme of things. So I think ideally this space should play very well over the next 6 to 9 months based on the trajectory that we are expecting for the economy and the markets.
Okay, got that. So that's the view. Let's also get some other pockets going then, sir. I wanted to start off by understanding metal story, especially after that recommendation of the safeguard duty. Are you looking at metals more favorably, or do you think this was already somehow priced in and not much upside would be seen?
Yeah, I think the way the metal stocks rallied, maybe barring a Hindalco, maybe that gets some benefits out of the Novelis tariff improvements. But rest of the pack, I think largely it was priced in. The expectation was that they were asking for somewhere around 20, 25%. The expectation was they would get around 15%, 12%. So I think they have got what they were expected. And the pre-news confirmation price rally in across metal stocks, if you look at them, I think most of the steel stocks had already rallied. We think that if you have to bet on this space now, you have to look at the long term. Short term might not be very promising because what they're trading at somewhere around 15 times. Maybe if you have, Tata Steel is trading around 15 times. Similarly, SAIL is also trading at similar valuations. Next year, numbers should be very good. Maybe on the basis of this duty, there could be a possible upgradation in earnings of around 5 to 8%. So that should help them a bit. But I don't think it's an across the board very bullish scenario where you could bet on them, and that these valuations, I don't think much is left on the table. Though Tata Steel and JSW have very good long-term capex plans, which might extend, 3 to 5 years. But less than that, I think most of them are fairly squarely priced.
Okay, fair point. Let's also look at some of the other pockets. Today, there is a strong momentum in the real estate names as well, sir. This space was getting a little into vulnerable zone over the last few weeks. It was giving up a lot of its gains that it had garnered over the past rallies. Your sense here, anything changing structurally? Should one look at it, or is this just a bounce that could probably give an opportunity to exit?
Some of the more expensive names, particularly catering to pockets where prices are exorbitant, particularly catering to Bombay high-rise luxury apartment areas. I think
Yeah.
there the pricing's a bit gone ori, so maybe there you could have some problems. But that segment, typically any kind of leisure or luxury segment is not prone to slowdowns. So I think there will not be much impact. But yeah, maybe you could be in a period where prices don't improve much for a sustained period of time. But the mid-income, mid-upper income tier, or even the low-income group, I think that space in India should continue to grow very handsomely. So I'm trying to focus on companies which are not primarily focusing on the higher end of the market in markets like Bombay.
Hmm.
So I think Signature Global seems like a good story which could grow at a very high speed over the next 2 3 years, and valuations are comforting after this correction. Similarly, one more Keystone Realtors, I think that's also a very good story to look at. Most probably they have more focus on the NCR region, and I think growth rates again there will also be very robust. The recent correction gives you a very good entry point. So these are two names within the real estate pack I'm looking. I think the front lines are still maybe a tad expensive, and most probably the price correction has been so steep that maybe they have some bit of time correction where they don't do much. But these stories I think are giving us more comfort in terms of valuation.
Okay, fair point. Before we go ahead and discuss some of the other pockets and sectors, I also wanted to get a sense of what's happening globally and how is that likely to be impacting the Indian markets and the sentiments. Of course, we await the Fed's decision on the rates as well. There is two ways about it. One is the slowdown concerns that could probably prompt the Fed to go ahead and look at a possibility of rate cut. The others believe that there could be a long pause at this point in time before the rate cut cycle resumes at this point in time. How do you think either of the scenarios is going to play out for Indian stock market? Should one really keep an eye out on that? What if a cut happens and what if it doesn't?
See, if a cut happens, it will be viewed positively because I think the RBI cannot de-align itself from what happens to US rates. So it will be easier for them to also follow suit and cut rates here. In case a cut does not happen, I think you could view it as marginally negative for Indian stocks or stocks basically, because then they have to have very strong reasons to move on a standalone basis to cut rates here. I think the broader mandate that Trump has is that lower rates and higher growth rates for the domestic economy. But with tariffs, I think he might be sending out very confusing signals to the central bank there also. So let's see how it pans out. I think it's a very confusing. But if a rate cut happens, I think it's positive for them as well as for us. Without a rate cut, I think there could be some, neutral to some kind of marginal negative reaction to it.
Fair point. This FIIs return that we saw yesterday, even though it was a minor under 500 kind of buying that we actually saw, can this now continue? Do you think enough has been done in terms of taking out money from the Indian markets? Are they going to be looking at it favorably yet again?
Yeah, that's what I'm thinking. I don't know what they will end up doing. The way they have been selling over the last 6 months, it seems like there's no end to it.
Yeah.
But but yeah, I think the holdings have come down across the board. I think gradually with the lower interest rate trajectory getting clarification, tariffs probably not being as tempting for India as they were expecting it to be. The rupee has also depreciated to a certain level. The dollar is also the dollar index per se has given up a lot of its gains. So I think all this is prompting maybe towards a return of FIIs. And as I told you earlier, the sell China, buy India, buy China, sell India, buy China story, I think that's also not gaining any further momentum. Occasionally, this theme does get momentum, but I think gradually it is dying down. So I think all this should lead to return of FIIs in India. And the domestic side should also always, anyways, continue to keep investing. So I think both combined, if the FIIs return to buying themes, I think it could be very positive. And I think these data points suggest that most probably this should translate over the next 3 to 4 months.
Okay, fair point. So, in case that happens, which are the pockets that you believe are likely to benefit from that? Are they going to be the consensus names, banks, financials? Are you positive on that?
Yeah, I think banks would certainly be there because they are the larger players. HDFC would be a key beneficiary of these flows. The names like Kotak would also benefit, though Kotak has been moving up quite some time. But in terms of valuation comfort, I think, maybe an Axis would do very well. IndusInd has its own share of challenges, so maybe it will not get that much of eyeballs because of the issues that it has been facing unless and until a very good clarification comes out regarding it, or RBI gives further comfort after the audit. So that might be, 3 to 6 month delay before that happens. But rest of it, I think, yeah, certainly HDFC Bank should be a beneficiary, being a larger entity, the largest probably to have globally as well as in India. So I think that is one bank that should benefit substantially out of it.
But how about the export-oriented spaces? How are you positioned on both IT and pharma as of now? IT, as of late, has again started to come as a cautionary zone for most of the analysts. They believe that the earnings may not pan out the way they were expected to be. Slowdown concerns could again bog down some of the earnings there for large cap IT names yet again. Pharma, on the other hand, of course, there is this risk of Trump tariffs, but we don't know how it's going to be entirely playing out. How are you playing both of these teams, sir?
See, firstly for IT, I think maybe the last 6 7 months it was an overcrowded trade. Uh, Everyone was seeming to suggest IT is a no-brainer. But if you look at most of the frontline stocks, what were they trading at? The likes of Infosys, etc., were trading at 28 times, while the growth rate was expected at 10 12%. So I think these companies can easily get 20 25 times. Right now, they have culled down to around what 22 23 times 1 year forward. So I think that is the upside you should look at. The smaller names or the high growth names could surprise you positively. Something like a Scient could surprise you positively, even if it trades at somewhere around 20 25 times. 25 times, I think you could have a 400 rupee upside on that. Similarly, the Mastex and the Emphasis of the world offer you good opportunities. I think Tech Mahindra has an opportunity, has a huge growth impetus that it can play on. LTIM could have some growth opportunity based on the merged entity synergies. So I think these are stories that will do well. The front lines might offer you, anywhere between a 15 to 20% upside. And I don't think that AI as such is going to be such a big disruptor over the next decade or so. Some disruption on the basic services, yes, that certainly will happen. But for it to become a mainstream disruptor, I think it will be the next decade. As with any kind of new trend or synergy, the market seems to go way ahead of its real potential and too fast. So I think that's what has happened with AI also. I think there's too much nervousness regarding US recession also. I think we are not looking at a full-blown recession, mostly a technical kind of recession, even if it does happen, which I seriously doubt, because gradually, if you look at the way the tariff tone has been coming down, they are also realizing that it's not a one-way traffic. And so I think it will not be very material. Maybe 1 or 2 months or 3 months kind of that, as where these companies also sound very cautious regarding what is going to happen, but not much, nothing much beyond that. So I think these valuations give you a good entry point across most IT stocks. I would personally use it as an entry point to get into these IT stocks. The second thing was pharma stocks. I think again, we are trying to concentrate more on the valuation comfort and the stories that are more dependent on India. Dr. Reddy is a classic case there. I think they are trying to ramp up the Indian business that should aid margins. The biologics business is also doing well. They have added products there. So I think Dr. Reddy could be a good bet. They have seen a decent correction from the top. Valuations are also very comfortable. So I think Dr. Reddy and the other name, if you extend your horizon to 18 to 24 months, I think Biocon could be a very good name. Again, based on the biosimilar space, they have gone into the Viatris deal, more or less maturing now in terms of business acumen, etc. Very less synergy problems. So I think Biocon and Dr. Reddy, these are two stories I'm looking at. And if you want to look at a smaller company, I think Atom's Drugs, that has corrected substantially. And I think the growth potential could be very substantial for there also. So I think these two, three names would be good from the pharma side. Largely domestic driven, and I don't think directly or indirectly across the board you will have so much trouble from the tariff part of it. Initially, 2 to 3 months, yeah, that could be a case.
Okay. One more pocket that I wanted to discuss is this new age tech, fintech space, particularly what's happening with Paytm, PB Fintech, smart rebounds, one MobiQuick systems, 2 3 days in a row, smart rallies unfolding. How are you looking at what's happening here? Does this interest you or intrigue you?
Uh, no, I think partly interesting. I think Paytm is not doing much, but I think MobiQuick had corrected substantially after the listing, and I think the valuation differential is substantial vis-a-vis Paytm, though the size differential is also there. But I think last I saw it was trading at what 1.5 times something sales, so EV to sales. So I think that is something that can see some improvement from current levels. Yeah. 1.9 times EV to sales, forward 1.4 times. I think even if you compare to Paytm, it should ideally trade at somewhere around 2.53 times. So this could be a good story to look at. I think the valuation comfort is there. Traditional valuation metrics, yeah, if you want to consider earnings and P multiples, you might not be able to justify these. But these are high growth companies. I think you're growing at 35-40% on the top line. So it's better to value them on EV to sales in the initial phase of it, as long as they can grow at that rate. So I think once a risk on is there, there is a possibility that the likes of MobiKwik, could easily get 2.5 times, and the sales should grow around 40% next year. So you could look at anywhere between 40 to 50 to 60% kind of upside on these stories. But you have to understand these are high risk, high return stories. Many things can go wrong. Many might have to wait a bit longer. But yeah, long term, I think they'll continue to do this.
Okay, fair point. One more space that's also buzzing off late is the capital markets related story again. This has been an erstwhile favorite. It was lying low for a bit. And again, we see strong bounce on BSE, on brokerage related stocks like Geojit or 361 WAM, Angel One. A whole host of this pocket is again back in traction. Any favorite stocks from this pack that you'd like to highlight that continue to hold value?
I think Angel One probably is decently valued now. It's not very expensive after this recent bout of correction. BSC, I would say fairly valued, not overvalued now, but not very undervalued also. And how this kind of expiry thing plays out over the next 3 to 6 months, we would like to watch that. But substantially lower. But CDSL, etc., I think still trading at about 40 times forward, unless and until some new business kicks in that gives that impetus that you can grow further. I think most of the exchange stocks might be now fairly valued, but I would not think that there is too much upside to them. But market euphoria can do strange things. But I don't think that I would still be very hell bent on buying it. But I think Angel One, yeah, is one name where probably valuations are comfortable. But the earnings risk from these expiry changes, etc., that could be some challenge that they face. But 14, 15 times next year, most probably flat kind of earnings, 15 times forward. I think, yeah, some bit of risk taking can be done there.
Okay, understood. Well, apart from this, another space that I wanted to get a sense from you is, how gold and silver have been continuously rallying. Now, we've seen in India for the first time 90,000 rupees per 10 grams come in on gold. Already in this year so far, we are yet to complete the third month in the new calendar year. But gold has already rallied over 14%, widely outperforming the equities. How should an average retail investor really look at it? Because this has created a lot of FOMO for investors. Those who definitely caught it right at the early stages, laughing away to the banks, but those who could not are now getting fearful as to whether they should put money when the equities are actually giving you an opportunity on the lower end, or should you bet big on gold, which is at an all-time high. How are you advising investors there, and any way to play gold and silver through the stock markets too?
Yeah, I think my simple advice is never to buy gold unless and until you expect the stock markets to correct substantially. I think the ideal point would be to hedge it against a very big fall in the markets if you expect that. From these valuations, I don't see that happening. And globally, unless and until geopolitical tensions do blow out of proportions, you could have one more round where gold goes higher. But from here on, I think equity probably is a much better asset class to invest in at these prices. The returns could be much better compared to gold. And in the long term, also, I think gold as a hedge in times of volatility or in times of uncertainty is a good bet. But generally, as an investment, it doesn't really make sense. So I'm not a very gold bull kind of person. Though the price performance has been very good over the last post COVID 4 or 5 years. But from here on, I don't expect a repeat of this performance unless or until something very scary happens at the geopolitical level or some kind of financial meltdown, which I'm not forcing in the near future. So I don't think that's a very good strategy. So the best strategy should be to play the equity markets. And if you want to play the gold story, I think Muthoot and Mannapuram could be good ideas you could look at. But the valuation comfort is in favor more in Muthoot, even if it trades at 2 times price to book. I think there is a possibility you could be looking at what 35, 40% kind of upside from current prices for Manappuram. Muthoot is roughly 3.5 times already. So I think that should be fairly valued. Maybe you add next year's earnings to the book value, you add another 300, $400 to the current price. That could be the fair value. But if I'd have to bet, I think Manappuram would be a much better bet to bet on.
Okay, fair point. Well, Mr. Awasthi, it's always a pleasure to speak to you, to get all those insights going on the markets, what to expect, the strategies across various spaces, and keeping the mind in the right balance, and then taking a right decision for investment portfolios is what we've learned from you. So thank you so much for taking out time and always, speaking to our guests, viewers, with that, of course, a balanced view and the sense of calm that you always bring in onto the street. Thank you so much for being with us, sir. All right, viewers, 3 minutes to go before we shut shop for the day. It's panned out to be, another fantastic day. After terrific Tuesday, we are in for welcoming this Wednesday as well. We have a 3%, we have about 1% higher on as far as the broader markets, 2.5% in fact on the broader markets, mid and small caps. The Nifty up by 0.3%. We also have the Nifty Bank up nearly 1%. Strong moves that can be seen. 22,900 is with us. Let's hope that we continue to close above that level. Across the board, gains on realty, PSU banks, consumer durables, metals, oil and gas, you name it. It's been a fine showing. And we've actually seen strong names even in the F&O. Torrent Power, 8% higher. Max Healthcare, 7.5% up. SJVN, Titagarh Rail, Macrotech Developers, PB Fintech, Max Healthcare. A lot of healthcare pharma stocks also pulling up in trade today. On the other side, when we see the down stocks, you have Phoenix Mills, Tech Mahindra, LTI, Mindtree, ITC as those which are dragging. PSU stocks in fine fettle, IRFC up 5.5%, HAL 4.5% higher, Steel Authority, NMDC, Concor, Power Grid, you name it. These were the names that were strongly up in trade in the PSU space. Nifty 500, GRSC tops the list with 20% circuit on that one. You also have names like Tanla Platforms up 18%. You have Premier Explosives also up in trade about 14.5% after a long haul. Swaraj Engines, you also have Idea Forge, Hariom Pipes, then you have names like SMS Pharma as those names that were up and about double-digit gains on across all of them. In the Nifty Next 50 list, you again had names like Indigo, 3.5% higher, DLF, Samvardhan Motherson, LIC, Zomato, Havells, Adani Total Gas, all of them stocks also buzzing smartly in trade. Small caps, you had BEML, 6.5-7% higher, Amara Raja Batteries, 5% up, CDSL, CESC, Aegis Logistics, Angel One, Aadhar Housing, all of these stocks also buzzing. Defense names clearly taking all the limelight, GRSE, Cochin, Mazagon, BDL, all of them smart gains in trade. Banking names, you had the PSU names like Bank of India up 4.5%, Bank of Maharashtra 3.5% up, UCO Bank, Indian Overseas Bank as well. Brokerage houses we discussed, Geojit, Muthoot, Poonawalla FinCorp, Spandana Spurti, the NBFC names continuously soaring higher. There were a lot of pockets that threw interesting names, and we have the final print, and thankfully so above 22,911, 77 points higher in trade, and no complaints whatsoever. Finally, we are seeing and heaving a sigh of relief when the market moves are on a stronger side. Remains to be seen whether again on a day 2 we will see FIIs on the buying spree yet again or not. Of course, we will also have to await what happens in the US in terms of the US Fed decision, and all of those cues will be important to track tomorrow. Stay tuned with us on Business Today Television. Even after market hours, you can continue to track what's happening and buzzing in the world of business and economics. Stay tuned.
Ladies and gentlemen, a very warm welcome to you on Business Today Television. I am Shail Bhatnagar, your host for Top Stocks and Top Funds. We are actually in the process of providing you with a lot of opportunities in the market that are going a-begging. Let's look at the Nifty first. We've now climbed above 22,900. This is a 1-month high